Hey, welcome back to the channel. The real estate stats were just released for the month of June. We're going to take a general look at what happened last month across Metro Vancouver when it comes to sales activity, when it comes to prices, and we're also going to talk about a significant change the province just announced that's going to help builders when it comes to cash flow on new projects. Real quick before we get started though, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you wanted to chat with me one-on-one, you can book me for a free call in the Calendly link below and on screen, and subscribe to this channel so you don't miss a future video. All right, hope you had a wonderful week. We're going to jump right into it. Lots to cover. The sales stats were just released by Greater Vancouver Realtors. And there was some positivity we could actually take from these numbers versus how the sales activity has been pretty much since the month of February. If we take a quick look back, double-digit sales decline since the month of February. January, we had a pretty strong month. What we saw in June was a little bit different. So basically down year over year. 9.9%, so not quite double-digit sales decline. But if we look at it on a year-over-year basis, and if we look at the prior month of May, May was down around 20% off of the prior year number. So although, yes, sales quantity is down, sales activity is down, it's not down by as much, I guess you could say. So from a sales activity perspective, it's down. One of the things that we like to look at as realtors that help us kind of glean, what exactly is happening in the market is we look at what's called a sales to active ratio. We've talked about that on my channel before, but it basically breaks down how many homes are sold per 100. It gives you a percentage so you can kind of glean whether we are in a buyer's market, a balanced market, a seller's market. Realistically, every headline is going to tell you that it's a buyer's market. And in a lot of areas, this is true. But different areas and different neighborhoods, they have different sales to active ratios. And so if we look at from a full product perspective, detached homes across Greater Vancouver, still a buyer's market. We've been in a buyer's market for a bit with a 10% sell-through ratio. So it just means that, 10 out of every 100 homes sold. Condos and attached homes, townhomes are hovering in a balanced market. Now, one of the unique things from the sales data from last month, a little bit unique, I would say, is generally what we've seen is that the areas away from Metro Vancouver, so say Vancouver proper, away from Burnaby, if we looked at areas like Coquitlam, if we looked at areas like New West, they've generally propped up the number. There would be more sales in those areas per 100 homes, strictly from an affordability measure. If we look, for example, at Vancouver, if we look at Vancouver West, we're looking at a benchmark price of homes over 3 million, right? And if we look on the East Vancouver side, it's 1.8-ish. We start moving east, it starts to come down. You look at New West, we're in the 1.5s, and generally these areas, Coquitlam, New West, from a sales activity perspective, they've propped up that sales active ratio, but didn't happen last month. A lot of these were still in single digits. We're talking 7%, 8%, 9%. So the detached market on its own, really struggling from a sales quantity perspective. Now, prices, which I'm sure you're probably more interested in, across the board down anywhere from 3 to 5%, depending if you're looking at, again, detached homes, you're looking at condos. A lot of it is very nuanced as well, especially when we're talking about condos. One of the things that was different last month is we actually saw some segments, some areas in the condo segment start creeping up back towards sellers markets. And when we say sellers markets, we're talking about sales to active ratios, 20% plus. We saw that in North Van. North Van was above that 20% threshold. So that was in a seller's market. East Vancouver getting close to 20% again, where it was hovering around 15, 16% in prior months. I'm not here to say that there's this huge shift in the market right now, but what I can say is anecdotally, feet on the street, my chatting with other realtors as well, it does feel like activity has picked up from a showing perspective. Now, month of June, for a lot of families, it's quite a busy month. And I think what's happening now as we enter into July there's probably a segment of buyers that are saying, look, maybe we can make a transition, we can make a move in the next month or so prior to going away for vacation, whatever it might be. For a lot of families, they were dealing with, schools out and grads and all these sorts of things. And it seems like we have a bit of a lull where people have some time now. And from a showing perspective, from activity perspective, talking with other agents, there's been a bit of an uptick. Now, I mean, let's not kid ourselves. It's not gangbusters. Things are not rounding a huge corner here. It's nothing like that, but there's a little bit more action in the market. So I mentioned how it's nuanced between segments and between areas. And I said, condos in many areas, they're kind of, inching up towards that seller's market. There's a lot of areas where condo sales are declining further from a sales active perspective. And that would be places like Burnaby. Burnaby, obviously, with a large chunk of inventory, pretty much anything above $800,000 condo-wise is struggling. If you're between 500 to 800, you're actually doing okay if you're a seller. But once you get above that $800,000 threshold, there are challenges to move product. There's a lot of new product. I believe it was last week's video, we talked about the cost to build. So of course, all of this new product that hits the market, it comes on at an elevated cost. You're talking one bedroom, 650 plus, 600 plus, starting to inch down even on the newer buildings. But areas like Burnaby, Surrey Central, downtown Vancouver is still hovering around a 10% sell-through ratio. So Vancouver West, excluding downtown, doing a lot better than what's actually happening in downtown. But all around, some positivity in the market. Again, down year over year. Inventory, we're still at those record levels, 17,500-ish, almost 600, 17,600 listings. Does not include developer-held inventory as well, which is slated to grow as we head towards the end of the year. So I want to jump into what's happening on the development front. Some pretty big news was announced by the BC provincial government. I believe it was yesterday. They were talking about home building and specifically home builder costs, development cost charges, amenity contributions. So these are the costs that a developer has to pay essentially to get rolling on a project. So, the amenity costs are going to go towards amenities, development costs just to actually get rolling. And so these are sizable fees that the developer essentially has had to have cash for. And so what the provincial government said is, look, we're going to create a system, and they call it a surety bond system, where the developer actually does not have to have that cash to be able to pay these development cost charges. So what would happen, previously is the developer would have to show that they had a certain amount of cash, and then they'd be able to borrow against that cash to pay these development fees. They'd have to pay it over a period of 2 years. So it's a sizable financial burden on the developer before they can even get rolling. Now, in this new bond scenario, and I say new because it's new for the province, but not new for all cities. A lot of cities have been doing this. With the bond scenario, it's almost like having insurance where the developer doesn't actually have to foot that cash or show that they have that cash in a bank account to be able to receive these bonds to pay the development cost charges. I hope you're following. But basically all it means is now the developer has more cash. They have more cash flow at the start of the project. They can take up to 4 years now to pay that back. So double the amount to pay it back. And now they can take this money and put it towards the project, put it towards the development, put it towards another project. So it frees up a sizable portion of cash for developers. It's positive news. It's going to be a little bit easier for developers to get rolling, to have that buffer of cash, to not have to show they have it in a bank account just to pay a fee. So this is going to help on the cost side, on the cash flow side, to enable a builder to get rolling. Now, if you followed my channel for a bit, in order for a builder to get rolling and to want to get rolling on a project, we need the demand. They need the demand so that they can hit pre-sale minimums and actually be able to move forward on a project. And, one of the things that has, really changed in the pre-sale market, besides all of the news and the headlines of, people being unable to complete on pre-sales, people shying away from pre-sales in general. You're seeing a lot of developers now that are offering some really good incentives to try and move product on the pre-sale side. But one of the things that has, kind of pulled out the demand is the foreign buyer. We've had the foreign buyer ban in place for several years now. It got extended relatively recently, and foreign buyers, they made up a segment, obviously, of that pre-sale purchase, because when we talk about first-time buyers, when we talk about locals, pre-sales don't often make the best first home for a lot of people. They're pretty good if you have your principal residence, you want to get into an investment property. Historically, that has made sense for locals, but we've relied so much on foreign money, but also foreign buyers for that pre-sale product and for the demand. And so when the demand isn't there, you can help the developer on the cost side and on the cash flow side to build more of a cash flow thing. But again, the demand isn't there. I was just reading earlier today where the first quarter of this year, 2025, from a population perspective, BC and Ontario lost population over the first quarter of this year for the first time in 74 years. And that is significant. That is monumental. We've talked a little bit on the channel about how there are immigration reforms that are happening right now. And so we're going to see immigration level off. We're expected that population is going to be pretty level. And so the demand is not there. And so these are two components that are going to need to work together for the developer to actually be able to move forward. But it's a good announcement by the provincial government. It's helpful for developers. I know a lot of people in the development community are excited about it, but there are still people in the development community saying, we got to do something about foreign buyers. We have to allow a pathway for them back in here to get some demand going so the developers can say, let's start this project, let's start marketing. And perhaps we do things like restrictive covenants where we say, okay, if you're going to buy it and you're a foreign buyer, you have to rent it for 3 years, you have to rent it for 5 years, whatever it might be. I do think there needs to be a solution surrounding that because the demand, it's not coming from immigration, it's not coming from population growth. We just don't have the demand within our borders to have builders building like they did in the past. And again, I've said it before, I've said it again, I'll say it again, when we talk about supply and all this oversupply in the market, that's a short to midterm thing. It's not going to be existent in 4 to 5 years from now. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And again, if you're in the Vancouver area or the Fraser Valley, you want to chat real estate with me, you can book me for a call, or you can just give me a call, send me a text, shoot me an email, whatever's easiest for you. But I want to thank you so much for watching this week's video, and I look forward to seeing you next week.